Welcome to Drilling into Crypto. I'm your host, Mohammed El Masri. Every week I speak to the leaders that are driving the global financial revolution. Drilling into Crypto puts the spotlight on the importance of crypto assets, on energy markets, and on global monetary policy. So, Jesse Berger, thanks for being on our show. I want to start off by getting an introduction from you about yourself, where you come from, what you've been up to, and how you ventured into Bitcoin and became an author of a book about Bitcoin.
Yeah, for sure. So first of all, thank you very much for having me on the show.
My pleasure.
Um, the title "Magic Internet Money." I'm not sure if you're aware or listeners are aware, but that was the profile photo of the original Bitcoin subreddit. It had this cartoon wizard that said "Magic Internet Money," join us. And so my book cover, the cover art is a riff or an adaptation basically of that original meme, and then obviously the name taken from that as well.
Okay.
But about me, my career began in retail banking in 2006, having studied economics and philosophy in undergrad. I then went on to work in wealth management, where I managed, stock and investment portfolios for high net worth clients. I subsequently got my MBA. I spent a couple years in management consulting, and the bulk of that was managing the market research program for a large insurance company in Canada, doing their global outreach program, managing their whole global outreach program to get feedback on customer experiences. So I did that up until 2018, when I left to basically pursue Bitcoin. And the reasons that I wanted to do that actually date back to the beginning of my career in 2006 and late 2006 and early 2007. I had been working as a retail banker, fresh out of my undergrad program, and the global financial crisis struck. And suddenly the Federal Reserve, the central bank of the United States, decided, hey, we need to print $600 billion to bail out the banks. And I was sitting there thinking, wait, in economics, I sort of guess they remember saying that, the central bank manages the money and helps the economy with its ebbs and flows. But this is a pretty drastic move. I didn't really think something like that was possible. And that forced me to ask myself the question, what is money? And I've been chasing the answer to that question ever since. And it, at the time, led me to gold, because gold was the best example of good, scarce money that could not be manipulated. But since then, I've learned that while the gold itself cannot be manipulated, it can be centralized. And as such, it has, it has an Achilles heel, which has been exposed, obviously. And so it actually, at the end of the day, does not make for good money. I have since come to learn how and why Bitcoin is a far superior form of money. And basically, I left my job having started dipping my toe into, crypto and Bitcoin in 2017, and sort of participating in the markets and seeing what happens. And I got caught up in some of the hype and blockchain fixes everything, and thinking that was the way. But as I learned more and more about the whole Bitcoin and crypto environment, my sound money roots, my, Austrian economic principles that I taught myself in my early days of my career came roaring back and clashed together with Bitcoin. And, Bitcoin, just as I was reading more and more, because there's so many brilliant minds out there that are putting out amazing, research materials, whether it's blogs and books, whatever, or videos, I just finally wrapped my head around Bitcoin to the degree that I could, given the skills and knowledge that I had, and have been just digging and working on it ever since. And when I left my job wanting to contribute to it, I didn't actually know what I wanted to do when I left my job. And there's a little bit of a story of, I started working on this project. I didn't even know what it was, where I was going to explain Bitcoin to people through this PowerPoint presentation. And Bitcoin's a complex subject, right? There's lots and lots to talk about. So anyway, I had this balloon, huge slide deck, and a friend basically told me, he's like, Jesse, you can't actually present this to anyone, but you have a great skeleton for a book. You should consider turning it into a book. It would be a good way to monetize it. And, a book is an accomplishment. Like it's something cool to do. Like maybe you should think about it. So once I slept on it, and the next morning I woke up and decided, all right, I'll turn it into a book. And once I made that decision that I was going to make it into a book, I thought about nothing else for an entire year. It was all about the book.
Yeah. Magic internet money came to life.
Magic internet money brought to life. There you go. Yeah.
That's amazing. Look, the book is great. And I think a lot of people need to read it. A lot of those who are getting curious about Bitcoin right now with the recent bullish trends. Most of us that went into finance or investment banking and that had this mind of seeing society in a different way and believing in alternatives and understanding that, the social construct can always be reshaped and the distribution of wealth is to a certain extent not fair. And those who had this mentality, maybe not full on, maybe, partially believing it and partially doubting it because they, we didn't, at the time leaving university, for example, you're not really 100% sure of what you should believe and what you shouldn't believe, but you have your instincts. And going based on those and venturing into investment banking and finance, you come out of it seeing a different point of view when you get into Bitcoin because it all resonates. And then you start having aha moments and realizing that, okay, this is why Bitcoin is amazing because I was in an industry that had challenges and I just found a solution, right? And this gets me to ask you about, and maybe I'm going backwards with my train of thought, but fractional reserve banking is something that, goes back to what you were saying when you got into finance and retail banking and realized that, something's off.
Yeah. I mean, some people are empowered to create money from nothing. You can tell me that, you're collateralizing a new loan with someone's income or some asset, but you don't know with certainty that asset will remain valuable. And you don't know with certainty that income stream will, stay to the fruition of the term of the loan. And so really you have a license to print money in fractional reserve banking. Banks are special. They get a license to print money because they deem this or that asset valuable. And sure, there's a whole regulatory framework behind it, but it's still effectively arbitrary. A certain group is deciding what things are valuable. It's not the market as a whole, individuals as a whole deciding what's valuable. And money is for everyone, is for absolutely everyone. It's not something that should be monopolized. And that's the big problem with fractional reserve banking is that it institutionalizes and monopolizes the creation and distribution of money in society. And that there are lots and lots of problems with that.
Yeah, for sure. And, these problems are evident sometimes in some people's lives, that are close to us. Right. And
very much
if you understand how the system works or how the banking monetary policies function, then, you would see that the reason for the challenges that most people are having today with their financial circumstances.
It is a driver of economic inequality, of income and wealth inequality. In fact, just yesterday, the New York Federal Reserve released a research paper saying that money printing, or maybe they had called it quantitative easing in this case, or money printing, I think they said, the title goes, may contribute to racial income inequality. And then if you look at the data that it shows, it's like, yes, that's exactly what it's doing. But they couldn't say in the headline that it does definitively. It just goes, oh, it may. But like if you observe anything happening in the world, if you observe start of money printing and then what ends up happening subsequently down the road, we just keep getting worse and worse off. And like we as a society and as people, we need to acknowledge that this may very well be the root of our problems. And, obviously it is my opinion that money is the root of our problems. And it's not that money itself is a bad thing. It's just that money as it is today is poorly constructed and it it's an unfair game. It's an inequitable game where certain people have more power and can generate more wealth for themselves easily and others cannot. And that's a problem.
I mean, the reason it's poorly constructed, in your opinion, or from your analysis and research, is because it's inefficient, right? And it creates inefficiencies because of the fact that it can result in waste. I want you to clarify that for me. I mean, how does the current money that we're using result in waste? And how does Bitcoin come as an alternative to promote growth?
So let's maybe think of an example where, we have a clean slate economy and sort of Bitcoin is the existing money. And, we only use Bitcoin in the world. So I know it's, a leap right now, but let's just make that leap for the sake of the example. The goal of money is to communicate where and when resources are needed, right? When buyers and sellers come together, they are trying to create, have a mutual exchange have an exchange that is mutually beneficial. You have a product or service that I want, and I have something of value that I can offer you in exchange. If we have a million different kinds of money, then calculating what something is worth and how to fairly arrive at exchange gets a little problematic. When there is one money for everyone and we all check that same scoreboard, we all know, there's only 21 million Bitcoin. So all the value in the world we're measuring against is 21 million Bitcoin. Prices will fluctuate based on what is being valued by the market, by people. So if we decide that there's a shortage of housing in the world, or the market starts telling you that there's a shortage of housing, printing money doesn't bring new lumber, doesn't mix more cement, doesn't train more skilled laborers to build those houses. Pricing, however, tells you that, prices are going up because we need this stuff. There's demand for it. And so it's pushing up the prices, and then the supply needs to adjust to come meet it, or the other way around, rather. I guess the supply is saying we need more supply, and so there's demand for these products and services. We need to reallocate resources. When the markets send the signal through pricing that this is where resources are needed, the markets, being us, people in society, see those signals and can react accordingly. But when a central bank just prints money because they decide that this is the correct thing to do, they steal value. Like inflation is just another word for theft. They steal a little bit of value from everyone, and then they pay to get this thing done that they think needs to be done a certain way, and maybe it does, and maybe it doesn't. And there's lots of inefficiency along the way because all these bureaucrats need to get paid along the way, and it creates false prices because it is, they end up channeling this purchasing power that they just stole. They're channeling that purchasing power into something, and maybe they do it correctly according to the market, or maybe not. But in effect, when they're doing that, because the price signals are not clear, they are redirecting value from what the market would naturally tell you is real. We become disillusioned with what is valuable and what isn't. We're pushing, the central bank or government starts pushing value to things that maybe it shouldn't be going to, that the market wouldn't otherwise want it to go to, because there's just not that much need for it, or whatever the unique situation is. So the market is the most effective clearing mechanism for aligning resources and getting things where it needs to be. Central bank money printing just interferes with that process. It becomes the air that fuels financial bubbles. And that creates all these imbalances in society. Like the goal of, again, trade is to get things done as efficiently, quickly, accurately as possible so that we all mutually benefit. But when someone interferes with that and starts pushing prices up because they start buying stuff that maybe we don't actually need, it sends a false signal. So we live in an illusion. We live in a false reality in terms of what we value right now when we base everything in dollars or any fiat currency.
If you have all this money printing happening and a bunch of people receive stimulus checks, right, and then they have excess money, for example, and they start using that money to buy things they don't really need, and that's pushing the price of such things up, based on that demand that came out of nowhere.
Yeah, it doesn't. Adding money does not add value to society, right? It just changes the measuring stick of how we measure value. And the goal of economic interaction, of commerce, is that we get to the solution as quickly, efficiently, accurately as possible, because then we can just move on to the next and keep things going. That's how progress happens. But the money printing creates it creates these false signals. And so how you distribute it, UBI or sending checks or whatever, there's going to be a million different little nuances of the effects of it. And it's hard to